Hello, I'm Donald Leggett. Welcome to the latest focusIR CEO interview. I'm joined by John Wisbey, the Chairman and CEO at International Lithium Corporation, who are listed on Toronto's TSXV and the OTC, and they have the ticker ILC. That's their main listing, I think. International Lithium Corporation have just published a really positive preliminary economic assessment for the Raleigh Lake lithium project, which is designed to assess the economic viability of the project. Welcome, John. You must be delighted. I'm simply delighted to be publishing the PEA for Raleigh Lake.
Donald, thank you very much for having me on here again. I appreciate it. Yes, I've got to say we're very pleased because it's one thing talking about what a wonderful deposit one may have and how good it could be, and it's quite another actually having external consultants review all one's numbers, having done more than 10,000 meters of drilling, and actually saying yes. We accept these resource estimates, and here is a calculation of the economics. And in this case, you've got a net present value of 342 million Canadian dollars. Now that's a much better number than just talking waffle about the lithium market and about our deposits. So yes, I'm delighted. And internal rate of return of 44.3%.
Now, you have a very interesting strategy. Often we have people here who are trying to build the biggest mine possible, and with a build big strategy. You've actually got a let's keep this focused and let's get this happening, which is a very interesting strategy. You're going to build a low impact, small scale, and therefore low risk lithium mine at Raleigh Lake, and it's going to produce lithium spodumene. So talk us through where you are today. Talk us through the project. We know nothing about it. Tell us all.
Well, let's put it into context. We've done all our drilling in an area of about 600 hectares on the Raleigh Lake properties that we have got claims for. Now we do have claims for 48,500 hectares. So I'm not for a moment saying that one should extrapolate 600 to 48,500, but very clearly there's upside from looking at the rest of the property. But we wanted to start with what we already have, and if that's economically viable, that's an obvious place to start. And we've got the huge advantages that we're very near to infrastructure. So we're near the Trans-Canada Highway, we're near the railway line, we've got a power grid going actually across our claims, we're near to gas. There are decent roads, so we don't have to build new roads, we don't have to build new power lines, we don't have to build expensive camps for workers in the middle of nowhere. And so that actually all goes tremendously towards our good economics. And so therefore, on a not huge deposit, but nevertheless big enough, we're able to come up with these net present value numbers of 340 million Canadian dollars, which is pretty good. I might say it again later, but for a company which at the moment has a market cap of about 10 million Canadian dollars, I do quite like the number 340, and I leave listeners to join up the dots.
And not to forget mentioning, perhaps you're too close to this, but Canada is one of those excellent mining jurisdictions. In terms of the Fraser Institute, it always comes up as around number 7 in the world.
It's a very good mining jurisdiction. I mean, obviously the political risk of Canada is pretty low on the world scale. I mean, there are mining ministers. There's a critical minerals list. The Canadian authorities are very supportive because they want ore produced in Canada, not just produced in China and shipped to Canada. And the same with the US, of course, which is very near to where our claims are. And it's a great place to be. So yeah, we're pleased with
that. The PEA is intended to show the financial viability of the project. You highlighted there the After-Tax NPV and the After-Tax IRR numbers. Can we dive into those a little bit more? Can you unbundle those and the other numbers for us, please? You're pleased with the financials, I can see that.
Yes, sure. Okay. So what we have is if we just look at the cash flows from the project, we end up with round about 600 million Canadian dollars of money thrown off. Of course, that's not a particularly good number to use because if it's coming in 11 years, we all know that there's inflation and there's a cost of money and et cetera, et cetera. So when you discount that, and we've used that at we used a discount rate of 8%, which seems to be rate most people are using at the moment, we get to a post-tax number of 342.9 million Canadian dollars and an internal rate of return, which is purely maths, of 44.3% on those numbers. And those are good numbers. Now, one thing I do stress in my comment in the statement is that it's very subject to lithium price. So, for example, had we done this 6 months ago, we would have had a very much higher number using the same spreadsheet, same methodology. Nothing changed. Clearly, if the lithium price falls further, we'll have a low number. I mean, but that's life for any commodity market. You can't have a crystal ball and say yes, the price is fixed for the next 11 years because we've chosen a number. I mean, that's very clear. But those are very good numbers to be starting with obviously upside if the lithium price goes up. And this year it's fallen quite a bit, as you probably know, Donald, but some of the listeners may not.
Well, I think our listeners love lithium, and I think they understand that commodities are cyclical, and it just so happens that lithium is in the down part of the cycle. When do you think? And it has indeed, as you say, affected the PEA financials, which is bad luck for you. So why do you think the price is coming down? And lithium, the new gold, when will it come good again in the future? Because I'm sure it will. These things are all cyclical.
Yeah, well, I mean, why do I believe in the metal? It's because there's so much demand for electric vehicles, electric battery storage, that it looks to, any sensible survey that I look at says that we've got more demand than supply. But that doesn't mean to say that all those things are static. So, for example, this year, I heard from a respected commentator recently that China has been a bit destocking. So rather than having 12 months of supply, they're down to about 6 months of supply. And obviously that means they're going to buy less. That means typically that the price goes down. But that destocking is not going to go on forever because, how low can you get? And certainly not lower than 3 months, I would think. And of course you're going to get new suppliers. So previously a lot of the spodumene, which is hard rock as opposed to lithium that comes from lithium brine, came from Australia. And that's a very good source of it. But of course, we're going to be producing some in Canada. And there's been a bit of actually shipping just the raw, not even, the raw ore. They call it DSO, direct shipping of ore, as opposed to distinguished service order, which is what I think of a DSO. And there's been shipping from Africa, where it's just taken out of the ground, and particularly the Chinese have just shipped it. Now, there's some countries that are saying we don't want that because we want to capture the value add in the country. But that's obviously also affected the market, and these things tend to recalibrate. But long term, and not even long term, I think medium term, there's appreciable demand for lithium. It's the dominant battery technology. There are always going to be others, but it's if the politicians are serious about making net zero happen or close to happen, then the demand for this is not going to go down soon. It's going to go up tremendously. In fact, the problem will be on meeting the supply needs to actually achieve net zero.
Indeed, and the West can't forever be dependent on Chinese production. So that's just a given. Now, what are the next steps for the project? Will you be using the PEA as a starting point to develop your pre-feasibility study? Is that what comes next?
That would typically be what comes next. I mean, we'll be doing two things. I mean, one, evaluating the next steps. I mean, the economics are probably not going to change very much other than through fluctuations in the lithium price, certainly for that one area. What we will be doing in the whole area is looking for more lithium. And so obviously, if we suddenly found another 30% of lithium, it's going to improve the economics because we could, if it's say a kilometre down the road, we're going to transport that a kilometre to use the same processes we've just built. We don't need to build them twice. We might be able to expand the open pit a bit. I don't know. That we'll have to see. But we also could look somewhere further into the claims, but just use the processing capacity again. So all of those things are going to improve the economics. And one of the other key things, I don't know if we're going to talk about rubidium, but we have...
Hold on, let's talk rubidium in a moment. Do you actually have a drill program in place? Do you is that planned?
We've been doing a little bit more as well, and we are planning what we're going to do in 2024. All these things need permitting. You can't just go and drill the Canadian countryside. You've got to get permits saying we're going to drill here and here and here. So obviously and that's a fairly easy process, but you can't just start drilling and get permission later. That's not a good way to go in a rule of law economy.
Okay, I'm not preventing you from talking about Rubidium, I promise. You haven't included it in the PEA, which is quite intriguing. But does that mean there's an extra revenue stream to come? And why wasn't it in the PEA?
Okay, I'm a very strong proponent of the value of this Rubidium, it's for those that again, everyone's heard of lithium. Not everyone knows where Rubidium sits. If you look at the periodic table, you have lithium, the alkali metals. You have lithium, sodium, potassium, and then rubidium and cesium. Cesium has major uses in atomic clocks. It has uses in oil drill fluid, and it's almost completely monopolized by a Chinese company. The world supply of cesium has been bought up in Canada and Zimbabwe and some domestically in China. And rubidium has almost all the same capabilities as cesium. And we've got quite a big supply. So the key to answer your question is why we haven't put the numbers in. If we were to take the amount of lithium that we've reported, and we have reported, there are the contained tons of rubidium. If you add up the measured and indicated and the inferred, you're not supposed to add those up. But I think the measured and indicated is about 800 and the inferred is about 500, something like that. The market price, and again, you can check these things out on metal.com, is about $1 million a ton. Now, I don't want to simply say, here's the amount of contained rubidium we've got, multiplied by that price would be irresponsible because we don't for a moment expect to get that much at this point. And there'd be a cost of digging it out. And so the question is, for a commodity that seems to have not a very high world demand at this point, certainly not compared to lithium or let alone copper or oil or anything like that, what is the real size world market? So on some estimates of that, and I'm reluctant to give them here, but we might have about 30 years world supply of rubidium. Now, if we were to sell that over the next 5 years, we obviously are not going to be selling that at the current market price. So we need to do a certain amount of work on how big is that rubidium market, how big could it be if we had a bit of replacement strategy for the cesium, and what is the likely price, and then probably taking into account, because you can't always expect to get the same price as somebody pays for a kilo to put in an exhibit or something. So those are the uncertainties. So we've at the moment estimated the rubidium at precisely 0. So I can't tell you how much we should add, but I'm damn sure it's not 0. So there's certainly going to be an add-on, but I just can't I can't quantify it at this point.
You're clearly a cautious man, John.
Well, I don't want this is about a PEA, and I don't want to go beyond the PEA and say that actually what the consultants have written is not is not sensible, because but we'll be revisiting this topic. You'll be seeing research papers on rubidium. Will be you can assume that the scale of this is such that it's very much in my interest to be talking to a lot of people about what the market really is.
It's a big deal for International Lithium Corp. I see that. Now, the company owns 100% of the Raleigh project, no royalties over it, which is great. So how have you funded the project to this point? You've been around a little while. And what comes next in terms of funding? Will you be looking for royalties? How do you fund the next steps?
Yeah, very, very good questions. So when I last saw you, I think we were talking about selling our Mariana project in Argentina, and we did that in 2021, and we got quite a bit of money for doing that, about $13 million for selling our small stake in it, which by then had diluted to about 8.5%. And we used that to fund Raleigh Lake broadly. We also raised some money, we also sold something else, but essentially we used that to fund where we've got to so far. And that's not a bad return on investment. If one spent a few million Canadian dollars, and now we've got a PEA which has a NPV of 342 million. Okay, not that that's cash in the bank, they're very far from it, but nevertheless, that's probably money well spent to achieve that sort of number. So the next stage, of course, is interesting. I mean, so the costs in the PEA are spelled out in detail. We haven't got time to spell them out completely today, but they are, for one process, 95 million, for another 40 million, something like that. So it's about 130 million Canadian dollars. It's all in Canadian dollars, about 1.35 to the US dollar. And obviously, financing that is an issue. It's not half as much an issue as if we were building a full processing plant, and we were that would be hundreds of millions of dollars. So for a company with a small market cap, and obviously we hope that what we've done here will re-rate the shares, and when we're working on other things too, that like any company is, and then there'll be a combination of, do we raise debt if we can? Do we raise equity? Do we use offtake agreements? Do those offtake agreements come with prepayments, et cetera, et cetera? So when we're looking at all those possibilities, there isn't an urgent rush to do this. I mean, we will need to get permissions to mine and do environmental studies, things like that. I mean, these things you can't do it overnight. Lithium mining is relatively clean compared to some other metals, but I mean, for example, gold often uses or creates cyanide. Well, if you just pour that into the local rivers, you're going to be facing enormous liability to local communities. And lithium is nothing like that. But still, we need to do environmental studies in the same way as for any other metal, and those things take time to do and also cost money to do. So I guess the next thing would be to get those well underway, do studies on how much we affect the water table. I don't think the answer is very much, but we have to prove it. And then we would start the mining program, and probably at the point where we're at pretty much pre-feasibility, that's the point at which to be getting that financing in place. And there are a number of different routes to take, and we've from doing it all ourselves, and or doing it in joint venture with a bigger company, or frankly selling the project. I mean, intellectually I'd prefer to do the whole thing ourselves, or in joint venture with us managing it, but we'll have to look at the practical economics of it at the time.
Are you telling us that nothing's ruled out at the moment?
Nothing's ruled out. No.
No, you're open to suggestions. Someone comes in with a very large sum of money, it's very hard to say no.
Yeah, I'm chief executive of a public company, and I have to act in the interests of shareholders, and I happen to be the biggest one, so it's also in my interest.
Your interests are aligned. Very good. Okay, my final question for you, John. Why would you suggest investors add ILC to your watch list? That's a question we ask all our CEOs.
Yeah, and again, it's an outstanding question. I recently went to a mining conference. There were 80 companies presenting, and it makes you think, what distinguishes us from these other guys, all of who have the best company in the world, and they've got highly prospective deposits. And I would say in our case, we've got a very good blend of people between financial experts and geological experts. I'm sure everybody else would say that, but I mean, not least, we're in a safe jurisdiction. We've got a deposit which is not proven in the mining sense, but nevertheless we have an economic assessment which has been looked at by consultants. It's not so early stage that it's just the CEO saying, this is going to be a wonderful, the next whatever the equivalent of El Dorado is. So I mean, but also, I mean, if you look at the economics of just this one project, forgetting the other things we're looking at, if you have a NPV of over 300 million Canadian dollars and you've got a market cap of 10, I mean, and people, I'm not saying this is the best property, I'm not saying it's the highest quality, but it's incredibly economic because of its nearness to infrastructure. And at the end of the day, I think shareholders want to make money, and I think where we are at the moment, I think there's a very good chance of that based on the disparity between valuation and potential economic value. And so if our market cap were already 400 million, then I couldn't say those same things. I'd still believe it was a good project, but I couldn't say that's why we should be on a watch list for people to look at buying the shares. And we are doing other things, not just in Canada. We've announced publicly that we're we're looking very closely at Zimbabwe. That's going to be a big plus for some people and perhaps not a plus for others. So, but that's what makes a market. And I hope to be able to announce something there in the next few weeks and months.
Okay, John Wisbey, CEO and Chairman at International Lithium Corporation. Thank you so much for talking us through Raleigh Lake, which sounds fascinating. If you're interested in buying TSXV stocks, we certainly suggest Interactive Investor, possibly Hargreaves Lansdown and some of those other platforms, but certainly do some digging around because there's lots of interesting companies, not just International Lithium Corp, but lots of interesting Canadian miners. They do mining very well in Canada. And meanwhile, do follow us on Twitter. That's at London Southeast or at _focusIR_, or register on London Southeast YouTube to receive alerts to our next International Lithium Corp interview. And all that remains to be done is for me to say thank you very much indeed for watching.